The farther west one looks right now, the safer the markets appear. Europe suffered this week after ratings agency S&P downgraded 10 Spanish banks, and the euro fell to an 11-month low against the US dollar after continued cash hoarding at the European Central Bank. Fears that credit lines are drying up held the common currency down at the 130 level. Both inflation reports from the UK were in line with forecasts of plus 0.2%, but UK unemployment hit a 17-year high. The only good news out of the region was a better than expected German ZEW reading of minus 53.8, which demonstrated that the probability of recession is decreasing. On the other hand, US jobless claims fell to a 3.5-year low, and Fed Chairman Bernanke expressed confidence in recovery when he announced that no new stimulus plans were on the table. Financial stocks led the news this week, with Canadian investment bank Canaccord set to buy stockbroker Collins Stewart Hawkpoint in a £253 million takeover. Lloyd's CEO Antonio Horta Osorio said he plans to return to the helm on January 9th after taking 6 weeks leave to recover from stress. Reductions in direct line reporting are expected to minimize micromanagement and allow him to focus on more strategic changes to the government-owned lender. The long-awaited report on why Royal Bank of Scotland nearly collapsed 3 years ago was finally released with no big surprises. Former chief Fred the Shred Goodwin was criticized heavily, not just for his punt on the ABN AMRO takeover, but for general mismanagement as well. Many members of the public have since expressed anger at the lack of sanctions imposed in the aftermath. The FSA was also blamed for its soft touch regulation. In the retail sector, Sports Direct reported a 2% rise in underlying earnings in the half year, which was up against the same period last year, an impressive feat considering that period covered the World Cup. Investors in Supergroup dumped shares after a series of supply chain issues led to profit dissipation. Travel operator Thomas Cook began selling Spanish hotels and golf courses to shore up cash, but shares continued trading around the 15p level. From the small caps, food and beverage technology developer Pursuit Dynamics reported a widened full-year loss, leading Chief Executive Roel Piper to resign. Now, a lot of macro news has to be crammed into next week ahead of the Christmas holidays. This includes a Bank of Japan rate announcement and merchandise trade report on Tuesday, a UK GDP revision on Thursday, and US durable goods orders, personal income and outlays, and new home sales all come on Friday. It will be a fairly quiet week for equities, though, with no blue chips in Europe reporting, and only Nike, Oracle, and Walgreens among S&P 500 constituents.